Well, good afternoon, everyone. My name is Pedro Esteves. I'm a junior at Harvard College, and today I have the pleasure of introducing Pedro Farias. Pedro graduated from Harvard in 2020 and actually presided over the Brazil Conference's 5th edition back in 2019. He's currently an investor at Stockbridge Investors, a hedge fund, and part of private equity firm Berkshire Partners, but he will be coming back to Harvard this fall, but this time to Harvard Business School to get his MBA. But above all, Pedro is a huge example to all of us Harvard students and to students across Brazil. So please, welcome Pedro Farias.
Valeu, Pedrão. Obrigado. Valeu. Good afternoon, everyone. So here at the Brazil Conference, we bring various Brazilian leaders to discuss the different problems that our country faces and how we can best solve them. At the same time, we always think it's important to bring distinguished speakers from outside Brazil who can provide us with a different perspective and different point of view. Today, I have the distinct privilege of welcoming to the stage one of the best investors of his generation and one of the best investors, frankly, there is. As Pedro mentioned, I studied in Harvard College and will be attending Harvard Business School. Coincidentally, our guest has also studied at Harvard College and attended Harvard Business School. He's known for his activist style, both in terms of his approach to investments, but also in terms of his approach to various social causes. We are super, super excited to have, for the 10th edition of the Brazil Conference, ladies and gentlemen, please help me welcome Mr. Bill Ackman. So just a quick announcement in terms of logistics. Also, Mr. Ackman, or Bill, has emphasized that he also enjoys having questions from the audience. And we will be taking audience questions. So the way for you to submit your question is through the Brazil Conference app. You can just click on the information for this panel. There's a QR code on all of your badges. If you're not sure about the app, you can just download it there. And then I have the iPad, so I'll see all your questions. And we'll make sure to get them to Bill as well to get his perspective on everything that you all would like to ask too.
And there's a really good seat available right here in the front row.
Right next to us. Great, so Bill, thanks so much for taking the time to be here.
It's interesting, the seat closest to me is available. It's available, right? Okay. Not unafraid, okay.
So thank you so much for being here, Bill. And I think I'd like to start, we have a lot of students here, so I'd like to start at the very beginning of your trajectory. I remember your first investment, when I was preparing for this interview, your first investment was a bank in the US called Wells Fargo. At the time, I believe your net worth was 40,000. Is that? All right, yes. So for context, that's 0.0009% of your current net worth.
Okay.
Which I think is a testament to how much you've grown over this time. But the question I want to ask is...
What's the compounded return from 40,000?
Don't make me do live math, please. I did study applied math, but I can't do it live. But I mean, even then, though, you were taking big bets. So you're known for saying, make a bold bet that nobody believes in. You like to go all in when you find something that you find really interesting. And I think you invested 50% of net worth then?
Maybe third.
30? Okay, so still a sizable portion of your portfolio. How do you have the gut, the conviction to make a big bet? And what, specifically for Wells Fargo maybe, what made you convinced to do that?
So I was a student. So my first investment mistake was going to Harvard Business School.
Good to
not
know.
because it's not a great business school, but because I went there to learn about investing. And I paid my tuition. Actually, my parents paid my tuition. I was responsible for my other expenses. I show up, and I get a thing called a course catalog. You guys probably don't know what that is, but it was like a book. Yes, a book. And I started looking for classes on investing, and there were none, right? So I got all excited about going to Harvard Business School to learn how to invest, and there was not one class, so I had to learn myself. So I opened a Fidelity brokerage account, and I didn't really know much about investing. And what led me to buy Wells Fargo was I had worked in the real estate investment banking business for 2 years, arranging mortgages for real estate developers, or at least learning about that. And Wells Fargo was sort of like the one bank, this was my father's firm, actually, that he could never place a mortgage with because they were too conservative. And all the banks had gotten crushed in October of 1990 because of their real estate exposure. So I thought, okay, I'll buy the most conservative bank. And I had the benefit of being a bit of a follower because Warren Buffett had taken a big stake at a higher price for me. That was the extent of my thesis. So I didn't do a lot of work. I probably shouldn't have bought it on the basis of the work I had done, but it went up, right? And because it went up, I said, oh, okay, this is really cool business. Okay. And that's how I got interested in investing. But what gives me the conviction, the reason why you can have a concentrated portfolio is, one, the type of businesses you invest in. There's certain kinds of businesses you can put a lot of capital into them. I would say banks are not one of them, so we don't invest in banks really today. So it has to be a business that you can predict with a very high degree of confidence, and you have to be able to sort of do the work. And you want to invest in a business that doesn't have a lot of leverage. If the business doesn't have a lot of leverage, is a simple, predictable, stable company, and you can be confident the business won't be disrupted, you can put a lot of your money into it and still do very, very well. And in fact, the benefit of concentration is you can limit your investments to just your best ideas. You know, why dilute your best ideas with idea 11, 12 when you can have more of one or two?
And I mean, you still live this today. I think your current 13F was indicating your top 3 positions are 60%-ish of the portfolio, maybe?
Yes.
This is a little bit of a follow-up to what you were saying. You're betting a lot. 2 of those largest positions, I think, are Chipotle and RBI.
Actually, the largest is Universal Music. It doesn't show up on a
sure,
13F because it's a Euronext company.
Got it. But so for those 2 brands maybe, or more broadly, how do you see that kind of, one of the big themes of this conference has been AI and disruption. Mm-hmm. How do you see traditional businesses maybe not being disrupted or disrupted? How do you reconcile these 2 trends, if you will?
Sure. So you have to, anytime there's, the most complicated thing to do as an investor is not to build a discounted cash flow model. It's actually to predict whether the business is going to get disrupted or not. That I would say is the most important thing. Is it a great business? What are the durability of the cash flows the business generates? What will happen to them over time? It's a bit of predicting the future. And the way we do that is just by discarding the businesses we can't justify. And then there are constant changes in the world, obviously, right? So AI is this enormous disrupting change. And you have to think about, is AI going to be a disruption to the positive, or is it going to be a disruption to the negative? I think in the food space or the restaurant space, I view it as a positive disruption. So the Chipotles of the world, the restaurant brands of the world, restaurant brands owns Burger King and Tim Hortons and others, they're starting to use AI in anticipating what they should propose to the customer when they show up at the counter or they go to the drive-thru. And that is going to improve the optimization of the decision making. Instead of relying on the person at the cash register to say, hey, would you like fries with that? Knowing something about the customer, you could propose various deals that they could optimize. It's hard to think how AI disrupts in a negative way. One of the great quick service brands. But so I think of AI with respect to restaurants, not really a threat. I think it's more of an opportunity. Universal Music, which is our largest investment, you certainly have to think about, obviously AI could have a very disruptive effect on music. But we've also come to the conclusion that AI ultimately will be a big positive. And it will increase the proliferation, will make anyone capable of creating music. But beyond, I don't think people are going to want to just listen to an AI-generated song. It's about personality. It's about building a relationship with an artist. And that, in a world where anyone can create music, you have this massive proliferation of songs being uploaded into Spotify. How do you sort through it? And that's really something that the top labels do better than anyone else. So again, I think as long as there are appropriate copyright and other protections that are enforced, I think AI is a positive. But it is, I would say, the most important thing as an investor is figuring out what could disrupt your business. What are 2 students working on right now that could disrupt the business that you own?
Totally. And one other follow-up from your initial remarks. So you said going to HBS was your first big mistake?
It was a mistake that I went for the purpose of because I thought I would take a whole bunch of investment classes. Now, what I did instead was I took accounting classes, and I took finance classes, and I took competitive strategy classes, and I took all of that stuff. It's actually a better way to learn about investing than just taking an investing class, is to open a Fidelity account, have some money in it, doesn't matter how much. You pay much more attention in an accounting class if you've got like 10% of your net worth at risk in some company. And then you're actually really interested in accounting. I mean, it's a good technique for, I'd say everyone should have an investment account at business school because you're going to start applying what you're learning, both investing and in school. and you're more focused.
That's totally fair. And I think my follow-up there is, obviously you've had some great successes. So MBI, which for those of you who don't know is a financial services firm, was maybe one of the big initial ones. You've had Wendy's within the QSR theme, Canadian Pacific, which is one of the largest railroad companies in North America. You've also had some drawbacks, some setbacks. And one that actually a lot of Brazilians might be familiar with, Herbalife, or Herbalife in Portuguese.
It's a pyramid scheme, watch out.
Well, so I guess, how do you, when you have these setbacks, mistakes, whatever, how do you think about not?
This lanyard that you have is Herbalife Green. Not sure. I think, but anyway, go ahead. Sorry.
No, you're good. I was just going to ask, so how do you prevent yourself from overcorrecting? Because clearly what you've done has worked, compounded over the long term. When you have a setback, how do you make sure you're not messing with like your formula?
So we're all going to make mistakes, and you have to treasure mistakes, because mistakes, experience, as I like to say, is sort of making mistakes and learning from them. So accept the fact that you're going to make mistakes. The people what you don't want to do is make the same mistake twice. And actually also, the best way to learn about mistakes is to learn about them vicariously, meaning read about other people's screw-ups is a much better way than screwing up yourself. But inevitably in life, you're going to have these. And the key is just examining and studying them. You know, I think there's much more study in the kind of media of business success, and much more, if you will, glorification of business success than there is study of business failure. Obviously, they still like to write about failures, but it's a bit like the Harvard cases, Harvard Business School cases. You know, Harvard won't write a case unless the subject cooperates. And when the subject makes a big mistake, they rarely want to cooperate and have a case written about them. I, on the other hand, have done that. So of course, like the J.C. Penney case is taught like every year at Harvard Business School because it's one of the few, sort of examples of errors. So, another way of what you're saying is in the investment business, everything you're doing is probabilistic, right? So there are no certainties. There's certain things that you should learn from and never do again, right? Using margin leverage and getting blown up, or shorting stocks, waste of time. Beyond that, it's just studying, thinking, learning, taking notes, writing down principles, and just moving forward.
Great. And we have a question here from the audience that is related to the activist theme and companies. And so someone here asked, Disney went through a very public battle. For those of you who don't know, Disney was going through a proxy battle, which means the board was competing with two other activist investors who had differing perspectives for how to run the company. Ultimately, Disney's board was able to win. They asked if you have any thoughts on what Disney just faced, and overall, how do you approach these situations where you have a strong disagreement with management? Because obviously you've had that experience too.
So in the early days of Pershing Square, no one knew who we were, and we had an idea for a company. No one listened, right? The first activist investment we did actually at Pershing Square was Wendy's. We bought 10% of Wendy's. Wendy's owned a company called Tim Hortons, the coffee and donut chain. And the value of Tim Hortons, we thought, was more than the entire enterprise value of Wendy's. And these were two very different businesses, one a really Canadian-based company with a phenomenal brand, and Wendy's was kind of a dying, sort of American or somewhat global, but principally U.S. Hamburger chain. And they weren't being run well together. A lot of value was, we thought, on the table. So we bought a stake, and I called the CEO trying to get a meeting. And I didn't get a return phone call. And I called again, no response. And what we had to do the first time is we hired Blackstone, actually, which had owned an investment bank at the time, to do a valuation of Wendy's. And we had our own, of course, but we wanted an independent view from a well-known investment bank. And I had a friend at Blackstone, and they agreed to do it. And then we just wrote a public letter. And then within 6 weeks, Wendy's spun off sort of Tim Hortons. And so that was kind of our first step. Now we're 20 years in. We actually haven't made an activist investment in 8 years, an investment where we've had to take a proxy contest or make a public presentation. And a big part of that is that we've built sort of a reputation over time of being a good, positive sort of shareholder. So I hope I don't ever have to run another proxy contest. But the fact that we were willing to do so in the past makes it less likely that we have to do so in the future. So Disney, a guy I know and like, Nelson Peltz, ran a proxy contest. And I really think, actually, Disney really handled it poorly. Someone owns a few $1 billion with your stock, is a smart, honorable, straightforward person who's keenly interested in the company. There is no harm in adding that person to the board of directors of the business. If you look at the Disney board, which I really haven't done, but it's like the vast majority of other large companies, very few of the directors own any stock in the company of any consequence. They're really professional directors for the most part, sitting on the board. It's a very helpful thing to have someone who has a major investment in the company sitting there. Even if all he does is disagree with the CEO, it's valuable to have someone in the room. In fact, I find it valuable. At Pershing Square at the beginning, we set up an advisory board with a group of people I respected. And I said, your job is to tell me when I'm wrong, because it's not helpful or valuable to tell me I'm right? What's helpful or valuable is if I'm about to do something stupid or I need advice. And so boards should welcome someone, so Peltz probably spent $50 million on the Disney proxy contest. I'm sure Disney spent like $150 million on this. It's like a total waste of shareholder money. Let the guy on the board. He got 37% of the vote. So by not letting him on the board, you've upset 37 percentage points of shares, and it's probably a much greater number of shareholders. The reason why they lost is that Vanguard, which probably owns 7 or 8% of the stock, and one of the other big index funds voted against him. And when an 8% shareholder votes, if they, instead of voting against him, they voted in favor, it would have been 45%, versus 55. So it's good to have a shareholder on the board. You don't want a group of people who just support what the CEO does. Again, you don't want the boardroom to be a constant fight every day. But Nelson's not that kind of guy. So I thought it was bad for shareholder democracy that he lost.
Maybe pivoting a little bit, we were talking a lot about your style from a fundamentalist activist approach. So fundamental investing, you pick a company, you do deep due diligence, and you invest because you think that company has potential. There's another style of investing that's more macro investing. So you think you're betting on overall trends. So then how is the overall economy going to evolve, and how do I adjust my bets? So most people maybe think of you on the fundamental side, but you've had some really successful macro bets as well. So you had one in the great financial crisis, but most recently you had, I think March of 2020, you had you insured your portfolio, and I believe that was a 100x return. Is that? Mm-hmm. So 100 times, not 100%. So 9,900% return. You recently, last year in August, shorted 10-year treasuries. Closed that out in October with good timing because then they rallied. So you've had success.
We shorted them earlier than August.
Sorry, yeah.
Yes.
And exited around October. It's a very different type of bet. You're not looking necessarily at a company, but rather at a broader picture. Is your approach different in any way between these two, or how do you allocate capital between them?
Sure. So the main engine of Pershing Square is owning 10 of we call the best durable growth companies in the world. We try to find these amazing businesses that we never need to sell. Each year they continue to compound their value kind of over time. And that's a kind of a deep fundamental analysis of the business, the industry, the competition, the risk of disruption, the management, and then just thinking about what could interfere with this business's progress over a long period of time. But the intended holding period is a decade or more. That's our goal. What we call asymmetric bets are these very small bets. They've been 1 or 2% of the portfolio in things related to the macro environment. So everything from credit and credit spreads, interest rates, currencies, commodity prices, things that can impact businesses. So as part of our assessment of a company, we're looking at what's going on in the world. And it's helpful to think about, the macro environment can have a huge impact. The Federal Reserve can have a huge impact on markets and values of businesses. So we're sort of doing it anyway as part of our kind of day job of looking at these companies. And that's led to periodically over time where the whole world, we thought, believed one thing, and we came to a very different point of view. And if you can find yourself with what some people might call a variant perception, right? You think that the world's about to end, at least the financial world, and everyone else thinks times are great. And that's really where we were in 2007. We had a very bearish view of what was going on in the credit markets. It seemed like this crazy bubble. And when you find yourself at periods like that, where the kind of vast majority of the consensus is in one direction, it's generally very inexpensive to bet that things are going to go the other way. And so there have really been three black swan type events. There's the financial crisis in the last 20 years. Financial crisis, there was COVID. In the case of COVID, we had a view that one, the virus was going to be everywhere. Two, that the only way to really stop the rapid penetration of the virus that was overwhelming kind of hospitals around the world was a global economic shutdown. And the markets were priced as if that was a zero probability event. So again, anytime you can look at things, come to a conclusion that's vastly different from others, you can make crazy kind of money on a small amount of money. So those are fun and interesting, but they're more kind of qualitative assessments of, I guess looking for cases where you have an extremely different view than others. Most of our public company, some of our most successful things you can do in investing where everyone thinks you're wrong. The only problem is you might be wrong, okay? So you have to differentiate between, you have to do your work to have the sufficient degree of confidence to recognize that you're right and others are wrong. What we do in these sort of macro bets is very few of them you can get to a really, really high degree of probability. And if you're wrong, we're buying these option-like instruments that can go to zero. So we adjust for that by investing small amounts of money. Whereas the core strategy will put 10 or 15 or 20 or even sometimes 25% of capital in a really great business. And there, it's much harder to lose a big percentage of the money you invest.
I think we as Brazilians are pretty aware and have grown up with a lot of risk embedded in our lives. So this is predominantly, the people in this room are predominantly Brazilian, the people on their live stream are predominantly Brazilian. We grew up with high inflation, with a lot of political uncertainty. That shaped our worldview into being maybe more comfortable with risk and volatility. How do you think that impacts the way that we look at the world differently from how the US looks at the world? Because the US now has, we were talking.
We have a lot of inflation, we have political uncertainty. We're on a path to Brazil.
Yes, so.
Right. Or maybe Brazil's on a path to where we used to be, and we're on a path to where Brazil was, right? If you look at our deficit, you look at the amount of debt we have, you look at the political disharmony. So what's your point?
So my question is, we're used to that. You all necessarily aren't. Mm-hmm. How do you think that's shaping the state of the US today? And how do you think, I guess, we maybe have an advantage in a way, if you think there is one?
So it's, in order to be a successful investor, you have to be very comfortable with volatility. It's not a particularly, so human nature, or if you think back to caveman times, right? So when all of a sudden everyone's running in that direction, it made sense to run in that direction because there was like a lion coming, right? But the financial markets, the lion, the same thing happens. Everyone starts running in that direction because there's a panic or the markets are crashing. Generally, the best thing to do is to go in the other direction, but it's against like human nature. But to the extent that you live in that kind of environment, you get comfortable with that the world continues, that's actually probably helpful in being an investor, because you have to be like emotionally dispassionate about investing, because you can get emotional when you start losing a lot of money. And so I think one of the keys there is just making sure where you are personally is like a safe place, right? If your entire financial fortune is in the market, and if you lose it, you're homeless, right? And if it works, it's great. That's not really what you want to be. You want to be set up in such a place that the volatility doesn't matter. You're never forced out. You're never forced out of your house, meaning you have enough savings that the capital you're deploying is not going to change your life to the negative in any kind of meaningful way. If you're set up that way and you're emotionally dispassionate, you can be a rational investor.
And you just joked that maybe the U.S. is heading towards where Brazil was. What keeps you up at night? That was another question here. What is something that really worries you?
I mean, I worry about, sort of state of geopolitics. I worry about, the Israel-Hamas war could become it's already, we'll see what Iran's response is to Israel's response to Iran's response. I mean, you understand how these things can turn into big, as they say, conflagrations, like a big war. We have Ukraine, Russia, unresolved, and a total waste of life, right? If you think about it, hundreds of thousands of people likely have died. And what has been accomplished here from a territorial or other perspective, I mean, basically killed a lot of young people, a meaningful number of young people as a percentage in Ukraine and similarly in kind of Russia. So, you know, we had this period where we seemed to have a relative amount of peace and stability, and it seems like we're headed to a period of extreme instability. And I worry about U.S. leadership. You know, I'm of the view that Biden should have, you know, said, hey, you know, I'm a one-term president. Let's let the best candidates emerge. He chose to do otherwise. I think that's very unfortunate. You know, I think Trump has his serious, he creates volatility, let's put it that way. And, you know, I think there are many more you know, I tried to get Jamie Dimon to run for president, you know, the CEO of JP Morgan, and he was interested. In fact, he wanted to do it. But the costs, the personal costs, the familial costs, the media, and how it can affect your lives and your children's lives. The problem is that someone at that stage with a public profile and a very happy, successful existence, do they want to give that up? And can they get permission from their family to give that up? And that has been a big deterrent to having our best and brightest be our leaders. That's not a good thing. And leadership, you know, really matters. I think there was a period there where business people thought it doesn't really matter who the president is. You know, government, it's government. But the government is so significant now in scale and impact and leverage and impact on everything from rates to commodity prices to trade to going to a war or not. It's an enormous factor in, if you're just focused on business, but it's an enormous factor in kind of our countries and our happiness. So I worry a lot about, you know, that issue, and I spend time thinking about it.
Brazilian history is a good guide. If you just read the last 20 years or so, you can learn a lot about political uncertainty and volatility there. So in case you're looking for more readings.
Yeah.
But one of the other topics, we touched on it briefly in terms of AI and how it can or might not disrupt certain industries. We had an audience question here, just thinking about how AI can generate different, from a perspective of companies that are in AI, how they are differentiating themselves within the space. You obviously had a position in Google. You still have a position in Google. Mm-hmm. The question was basically, how do you compare what Google is doing versus what Microsoft is doing versus what Amazon is doing versus what Meta is doing? How do you reconcile all these different activities? Do you think there's ultimately going to be some asymmetric returns to specific players? Do you think there are multiple winners? How do you view that moving forward?
So when we bought Alphabet or Google, because at the price we paid, we paid about 15 times earnings for Google. Our view is that their advertising, kind of online advertising franchise is pretty close to being undisruptible, and we felt AI was a risk to that part of the business, and we spent most of our analysis on, you know, where are they positioned relative to Microsoft and others. Google had the benefit of really being one of the first and largest investors in kind of made a big commitment to AI, but as importantly, beyond the financial resources they have an incredible data trove. The ability for them to, you know, build models on the basis of data is probably unparalleled, or maybe Microsoft is really the only potential competitors. They have, you know, enormous cloud resources, enormous processing resources, enormous data, and enormous financial resources, and they started early. And based on the work that, you know, the team did, we concluded that they were not, you know, what caused Alphabet stock to trade really cheaply was a very successful demonstration of ChatGPT and a very pathetic demonstration of Google's product.
We actually had Michael Pell from Microsoft here today, and he gave us a live demonstration of Copilot too. Sorry to interrupt. That was a very interesting experience too.
So I think I don't know who's going to be the ultimate, quote unquote, I don't know if there's going to be one winner in AI, but I think what we concluded was ultimately that the Google, you know, kind of search bar process and the real estate they own in that space and the minds of the consumer, et cetera, is going to be a very meaningful barrier. I mean, if you look at, you know, Microsoft has tried to enable Bing and drive, obviously, you know, use of their product, and there was a slight little, I think, uptick when ChatGPT was launched and Google's market share, if anything, has gone larger over time. And they've also made a number of significant releases, both in the kind of language model space and other, video and other AI-related technology that we think is either best in class or very close to neck and neck with the competition.
Totally. One of the other things we are all very interested here in the Brazil conference. We have a lot of very successful business people and entrepreneurs who come here, and they talk a lot about philanthropy and the importance of giving back. You've in the past, I know you considered that your approach from early on was you want to have success, and then you also want to distribute resources, the resources that you don't need, so that you can empower the initiatives that you believe in. So I'd love to hear a little bit about just an overview of what has been top of mind in terms of philanthropy recently. How do you think approaching which projects you'd like to fund? And in particular, if there are any topics today that you'd like to discuss, what's been top of mind?
So a few things. So having done philanthropy over more intensively since we launched the foundation in about 15 or so years, what I can tell you is it's way better to solve society's problems with for-profit solutions than philanthropic solutions. So you should actually feel good about going to work for a company that makes a profit working to solve a problem. And the reason for that is that the incentive of profits, the ability to pay market salaries, it was kind of an interesting early experience I had. A guy named Chris Hughes was one of the early Facebook founders, and he helped Obama get elected with using kind of technology, and he retired at 30 years old from Facebook, and decided to launch a nonprofit Facebook-like social media product for the philanthropic market. A place where you could sort of log on and learn about, like, if you wanted to volunteer or give money or whatever. I thought it was an interesting idea. Had a Facebook founder, and so I invested some philanthropic capital with him. And ultimately, he failed, and we sold the company to a for-profit. And it taught me a lot of valuable lessons. So one, he couldn't hire the best engineers because he couldn't give stock options. He couldn't pay market salaries. It was harder for him to raise capital. So the capitalist system and the system of building companies, we're going to solve on a much more scalable basis. So the first lesson is look for a for-profit solution to a problem. So what we're doing is we're saving philanthropy to situations where there isn't a for-profit solution. And it's a bit like there's a gap in the capital markets where the venture capitalists, if you will, are not willing to invest early enough. And so we're doing stuff in scientific research at a stage where the biotechnology venture capitalists are not yet ready to invest. But I think you've got to be very thoughtful about philanthropy because I had the opportunity to interview Warren Buffett in front of a group of Giving Pledge, people who were planning to give away all their assets. My opening question for Warren was, I said, Warren, I have an investment opportunity for you. I've got a company, it's been in business for about 10 years. Each year, they lose more money than the previous year. And they seem actually kind of excited about it. In fact, they present the results as how much they've lost. And they rely entirely on raising money each year to keep the gap. Their board has 40 directors. Half come to meetings, but it's a different half each quarter. They don't pay market salaries. They have no incentive-based compensation. There are multiple companies operating in the same industry, but there's no M&A activity. And I kind of went on, and I said, would you ever invest in a business like this? Buffett said, Bill, I think this is a trick question. And what I was talking about is the description, unfortunately, of many of, I would say, more old-fashioned versions of philanthropic organizations, but a lot of them are structured that way. And so what we try to focus on, we've done a lot of investment with what some people might call social entrepreneurs. People who have interesting business models, and in some cases, actually, being a nonprofit is a competitive advantage. So we invested in something called Recidivists. We probably invested $15 million. It's a woman who left Google. Her uncle went to jail. And she learned a lot about navigating the process of his ultimate release and all the steps you had to go through. But the prison system in the US and the parole system is incredibly backward. And there were like 7 or 8 different databases from which they had to kind of collect information, all these steps they had to fulfill before he could be ultimately released. And so what she built was like this dashboard, which consolidated all these various databases so that the people managing the prison system and the parole system could more efficiently, they have like 90 prisoners per parole officer, and they just, there wasn't enough time in the day for them to manage the process. Meanwhile, people are sitting in prison that don't deserve to be in prison, or they're, the burden to the state, impacting their lives, impacting their families. And, when I first met her, I said, well, this sounds amazing. Why you should be a for-profit? She said, the problem is that if she were a for-profit, she'd have to go through a very different review process by the various states and other kind of agencies. But because she was a nonprofit, she was able to avoid that whole thing. So there are spaces for interesting, I'm not discouraging you from never working for a nonprofit NGO, but if you can find a for-profit way to solve the problem, whether it's climate change or whatever the area you're interested in, the for-profit company will have a greater probability of success.
Bill, one of the things you're known for is you're very outspoken, both in terms of...
I'm pulling up my socks because you're a little bit of leg sticking out.
Oh, thank you. Right before
never liked, like the guy has like the hairy legs sticking out of the sock. It's not a good look.
I learned a valuable lesson earlier today when Bill arrived. We were just outside the room, and he said, I like your tie, but if you're going to wear a tie, you got to wear it right. And then he did me the favor of fixing my tie, which I very much appreciate. Is it right
nice,
now?
Right? This looks good.
Looks good? Thank you. Let me know if it comes back up.
I wasn't looking down at his socks, however, at the time.
I guess somewhat related
This
to
is how
that.
you disrupt the moderator. Very effective.
It's a very good transition, though, into the question I was going to ask is...
See how good he is, see?
No, but you have strong convictions about a lot of what you believe in. Mm-hmm. And so you were very outspoken on various topics. And I'm curious about how you think about prioritizing your time in terms of your work as an investor and then the social issues about which you're very passionate. Do you see it as those social issues energize you and kind of they drive you to do better? Or do you see it as I don't want to call them a distraction, but they're not necessarily what you'd rather be doing, but you feel compelled to speak about them? And how do you reconcile these two things, and how do you prioritize between them?
So what's interesting about the job of an investor is that it really matters what's going on in the world. What's going on in the world is not just interest rates and GDP, but it's also what's going on in society, what's going on in university campuses, what's going on with various ideologies and how they're promulgated and impact on business. So I do think a big part of my job is to pay attention to what's going on in the world. That's one thing. The second thing is, when I was frustrated 15 years ago about bad things going on in the world, I kind of blamed my parents' generation because they were the generation that was kind of leading. They were maybe 20 years ago, they were the CEOs, they were the political leaders, right? Now I'm 57. Sadly, my dad's gone. Mom is 83. But I guess we still have an octogenarian president. But it's actually our generation that's responsible for what's going on in the world. And I also think your responsibility for what's going on in the world is correlated with your ability to do something about it. So if you're a successful person, if you have substantial financial resources or Twitter followers or whatever it is, I feel like you have an obligation to intervene on things where you think there's a need for intervention. And that's kind of what motivates me. And I don't see it at all a conflict with my day job, right? We're long America in terms of owning some of the best North American-based companies. We're actually long, we own Hilton, Universal Music. These are global companies. So to the extent that on the margin we can help the world, it's good for the portfolio. So I don't consider it all a distraction or a bad use of time. And the nature of the way that we invest is not so intensive. Right, our portfolio, someone wrote an article, I think in Bloomberg, saying, Bill got paid XYZ last year for doing nothing, right? Because we basically bought one new stock and we sold a stock, right? And people are like, oh, you get paid for this. But investing is not you don't get paid for activity, right? You get paid for outcome. But the style of our investing, we're looking for businesses we never need to sell. And that frees you up mentally to focus on other things. And sadly, we live in a world right now where many people might actually, I hear this from many people, agree with me about various topics, but they're afraid to say something because they're afraid of being canceled by their colleagues at work, or they're afraid of losing their job, or they're afraid that there's some personal repercussion for speaking the truth about something. I feel very fortunate in being, certainly people can say not nice things, I'm still being protested. Once a week, a group of protesters show up between 12 and 2 on Thursday, so if you guys want to come, maybe we get this whole group there and we can I've offered to meet with them and hear whatever their issue is, but so there's some downside, of course, to being public, but I think it's important, and I think the way that we effectuate change is first identifying the problem, and if everyone just sort of sits here silently, that's when silence equals death, right? If you're silent about really important things, bad things can happen in the world, and so it's important for us to speak up.
And so what a lot of people here know about, too, is we are currently on MIT's campus. There have been disagreements between you and some members of administration from the two universities that are the namesake of the conference, Harvard and MIT. I'm
sure they were psyched to have me come speak today.
What compelled you, I guess, to speak out? You mentioned you feel you have this responsibility. Did you feel a particular affinity for Harvard because you studied there? What was, for that particular issue, what caused you to be involved?
So, my trajectory on a number of these issues recently was, one, the events of October 7th, the Hamas invasion of Israel, and then the surprising response of 30 Harvard student groups coming out the morning after what was, I'd say, probably the worst terrorist acts in our history, as maybe global history, at least in recent decades, to say that Israel was solely responsible for the acts of the terrorists. And I was taken aback by that, obviously. And I didn't understand the thinking behind that. And that led me to do sort of a deep dive on what was sort of going on campus. And that led to learning about issues of free speech or lack thereof, the sort of DEI movement on campus, which I ultimately concluded was behind some of that, this sort of oppressed narrative, something, words I hadn't really thought about, or, I kind of got drawn in to that sort of topic, and then I've written some tweets about it, and yeah.
Are they still called tweets if it's X, or is that?
It's posts, written some posts, but I wrote 5,500. I'm probably the longest posts on Twitter in terms of word count, and the one I wrote on DEI got 36 million views. And for 36 million people to view something that, I don't know how many read all 5,000 words, but that can actually have an impact. And again, to be clear, I'm in favor of diversity. I'm in favor of equity, i.e. fairness, equality of opportunity, and I do think it's critically important to have organizations that are inclusive. So when I first heard of DEI, I thought it was something that was a good thing. But ultimately, the way it's been implemented, I believe, on campus and in some companies, has been harmful. Harmful not just to people who weren't the intended beneficiaries of DEI, but also harmful and increasing racism as opposed to decreasing racism, which I think was, at least I assume, was the early ambition for DEI.
And so you talked about there comes a cost with that, which is you have personally protested or have been talked about, not necessarily in the best light sometimes. How do you think about, with everything that unfolded, do you think you would have approached it in a different way at all? Do you think that you like the way that you've approached it? Are there any reflections, I guess, from the experience overall?
Look, I think universities are really important. It's actually, if you think about the structure of how universities were designed, faculty were given this thing called tenure. Tenure is a very unusual thing, right? They have it for the Supreme Court, they have it for faculty, but no other place in the world am I aware of, in corporations or otherwise, does anyone have a effectively life position. And to grant that, it comes with certain, I would say, responsibilities and privileges. But the idea behind tenure was for universities were really important places for people to share controversial points of view, right? The way we advance science, for example, is by Galileo challenging, Christian orthodoxy, right? About, is Earth the center of the universe? Which planet revolves around the other? And to say certain things could put you at risk. Well, universities were supposed to be a safe place for free speech and for people saying controversial things. And unfortunately, I think many universities are not that anymore. And that the sort of political leaning of the campus veered so sharply to the left, and that the campus were sort of under control of, kind of a political movement that, has attempted and fairly successfully to suppress speech on campus, and that affects learning. You're not going to learn. Your obligation as a student, right? Why are you there? You're there so you can learn. How can you learn if you're only hearing one side of an argument, right? So what I do on Twitter, X, is I follow people who say climate change is bullshit. I follow some smart people who make a pretty credible case for that, and I follow people who say the opposite. And then I listen to their arguments, and I try to get to the truth. And actually, X is a very good place to do that, because you can find very thoughtful, smart people on different sides of an issue. COVID, there were a lot of people who said, this is a silly virus, it's stuck in China, there's no real issue. And there were some other people saying otherwise. Well, I followed all of them, and I concluded, okay, there's a problem here. And then I combined that with knowledge I had myself about, I understand what daily compounding, the significance of that, just by virtue of being an investor. And that led to the best investment we've made as a firm. So there's a lot of value that can be gleaned by listening to wide viewpoints. And my concern about Harvard and maybe less so MIT, because MIT is more STEM, but even in the STEM world, there is becoming more orthodox. I mean, if you look at what happened on just during COVID, there were scientists who questioned shutting down schools, who questioned wearing masks, who questioned whether we should be giving this mRNA vaccine that had very limited testing to 18-year-olds and 5-year-olds. And that speech was suppressed. And that's a very, very dangerous thing for the world. And it looks likely that the advice of the suppressed scientist turned out to be the correct advice. And so, I'm concerned about free speech on campus, or the lack thereof. And you should fight for it as a student.
So I think you've been very effective in using social media to raise awareness for various causes. And I think what you said is really important about ensuring the diversity of opinions and exposure to these different opinions. I think one of the criticisms people often have about social media is that it ends up becoming more of an echo chamber. So you're following the people with whom you agree, and the algorithm is feeding you people with whom you agree.
The algorithm is kind of screwed up with me because I'm following people on both sides. So I do get to see, if you set yourself up that way, you will see both sides of an issue. And it can be very, look, I proposed to Elon, I've said, look, just have a little button that you push where someone has a post on XYZ, and you click a button to see the most liked post addressing the same argument on the opposite side. And I hope they're working on it.
I think that's very important, because to your point, social media, the intent of social media can be very positive, because it allows everyone to be able to express their opinions. But then actually getting the diversity of opinion is not always the case, I guess, on social media. So, but I think we have time for about 2 more questions. One of the ones that I'd love to get your perspective on is Latin America. We haven't talked too much yet about Brazil, a country that we're all from. Any perspectives on the region overall, or Brazil in particular? How do you view about the risk-reward, the uncertainty that comes with Latin America?
I mean, with uncertainty comes great opportunity. I mean, look, Brazil has enormous resources, a large population. I mean, everyone I've met from Brazil is super talented, charming, interesting person. Maybe I see a biased selection. But no, I think it's Brazil's an incredible country. A lot of, the United States is in its growth trajectory is in a very different place than South America. So it's easier generally to make money in a world where the tide is rising more rapidly. And also, I think it's probably less competitive. There are fewer people that go to the MIT Sloan School or Harvard Business School or Babson or some other great business school and then return to Brazil to go build a business. So I think it's more opportunity rich, and by virtue of that.
So if you were starting a company today, say you're Brazilian, if you were starting a company today, would you go back to Brazil?
I probably would. Again, it depends a little bit on the political context, and as long as capitalism remains permissible, sure. That's the one caveat.
It's an important one. We yesterday had Jorge Paulo Lemann here. One of the big pieces of advice he gave was to try to focus on, in his case, his number was 5. So 5 things that you're trying to work towards. And always have those 5 things so that you can prioritize and you're not trying to do everything at once. I'm curious for 2 things. One is, what would you say are your 5 things right now? And 2, if you were giving advice to a student, let's say, hypothetically, they also went to Harvard College. Maybe they're about to go into HBS. Maybe they're sharing a stage with you, asking for a friend. If they want to be as successful as you as an investor, what would be the 5 things that you'd recommend they focus on?
Sure. So what's interesting about investing is that almost everything you need to know you can learn by reading and watching a bunch of YouTube videos. It's not astrophysics. It's not some of the stuff they're doing here at MIT. It's basic algebra. So the math's not very complicated. You can see a million examples. You can read 10 years. You can go look at some of the most. You can read the last 10 years of annual reports of NVIDIA in order. You're going to learn something from that. So there's an infinite amount you can learn just by reading. You don't even have to go to business school to do it. It's actually going to business school kind of gives you a little bit of time to go do study some of that stuff. So that's one. 2, what matters when you graduate is not how much money you make the first year or 2 you get out of here. What matters is that you're still on this maximum kind of learning curve, and it really matters who you work for. And by that, I'm not saying the brand name of the company, but the actual people that you're going to be surrounded with, because those are the people who are going to be delivering as much training as possible. So some people select the McKinsey or the investment bank because that's the highest starting salary, and maybe you're feeling some pressure by virtue of the fact you've got student loans. I get that. But it doesn't, I always made the argument that my net worth has never changed. It's just I have a high discount rate, right? So, when I have the 40,000, that's why I asked you the question in the beginning. What's 40,000, up?
4 points, yeah.
Yeah, whatever. And I think you should think about it that way, right? So take the same long-term approach to your investing in your life that you should investing in companies. And then some of the other obvious stuff, advice I give people like yourself. It's really where I started, maybe one of your first questions, which is, the problem you have is if you're Brazilian and you're at a top school in the US, you did a lot of good things before you got here, right? This wasn't necessarily the most straightforward path, which likely means you've had a tremendous amount of success already, and so you're spoiled by that. And then you go to Harvard, and then you get into Harvard Business School, and maybe you get a really good job. And so far, all you've had experience with is success. But long-term success depends on how you deal with failure. And you're going to fail. Something's going to fail. Could be your health. You could have a health incident. It could be an important relationship. It could be an issue in your family that it's not a failure, but it's something that is a very significant challenge that you have to deal with. Or you're going to make a mistake in your job, or you're going to get fired, or you're going to start a company, or you're going to raise some money and lose it. I haven't really, I read a book about Jorge Paulo. What's that?
Dream Big, yeah.
Dream Big. I don't remember what he's had a challenge actually more recently. So you look at a guy like Jorge Paulo, who's had this incredible success, and they've had a very challenging time with one of their companies. The point here is, super successful people, all of them, almost all of them, have made mistakes along the way. And the way they succeeded is that they dealt with that mistake in a really good way. And my approach to dealing with mistakes is to say, look, expect that it's inevitable. So when it happens, don't let it rock your world, even though you've only had success so far. And two, one, study it, learn from it. What did I do wrong? Make a course adjustment, and then start making progress, digging yourself out of the hole. And don't expect overnight progress. Don't worry that where you were here, now you're here, just looks so far away. Just make a little bit of progress every day. And progress, like money, compounds. And the way that compounding money looks on a chart is you don't see much in the first sort of period. And at a certain point in time, all of a sudden the chart goes, kind of takes off. And the same thing works when you're coming out of a really challenging kind of period. So if you manage through the bad times, you're almost, the last thing I didn't mention is your health is the number one thing on the list. And when you're young, you don't worry about it much. But stuff that you're doing when you're young actually has a long-term impact. I'll give you a small but sad example. Michael Porter, I'm sure everyone knows who he is if you're a business school student. He's probably the most famous competitive strategy professor in the world. And Michael has extremely severe Alzheimer's, to the point where he really can't speak or walk, which is an incredible tragedy. And he's not that old. I think he might be 75 now, or 74. But Michael, every time I would see him, he was on my advisory board, he'd have 6 Diet Cokes. He would probably have 10, 12, 15 Diet Cokes a day. Well, Diet Cokes is a chemical, right? There's, what's the chemical in Diet Coke? Aspartame. Yeah. Well, if you look up aspartame, it has neurological effects. And he gave himself this enormous dose of aspartame literally every day for 50 years. I don't know that that was the cause of his brain issue, but it really matters what you put in your body, right? So think about, alcohol consumption, minimize it. Drugs, minimize. Even prescription drugs, minimize. Okay, every drug has a side effect. Running, weightlifting, going to the gym, doing something, playing a sport, that stuff's really, really important for your kind of long-term durability. It's like you're born with, it's like, the analogy Buffett makes is it's like you only have one car, and you're in it right now, right? So how do you take care of it? And if you think about a car, how does the car look after 30 years, let alone 80, right? And you're not made out of steel, right? So make pretty thoughtful decisions about taking care of your health, your body, and it will help you. And people in business, getting back to the business, people respond to healthy people. I remember, someone I know was considering allocating money to some guy and chose not to because he felt, was concerned. He was like sweating in the meeting. He's overweight. He doesn't take good care of himself. It's actually, business is like a full contact sport. If you're going to be CEO of a company, you're going to be a founder of a startup, you're going to run an investment firm, it's like a competitive athletic activity. It's a lot of stress or whatever. You're not going to make good decisions unless you're healthy. So I would say focus on health. The time to start doing that is when you're young. Develop really good habits. Avoid eating food from package. No Diet Coke. No Coke either, okay? Okay. Sugar, poison.
Did you tell Warren that?
Warren would have lived to 150 if he didn't drink. No, Warren has some crazy genes that enables. But, okay, so Warren Buffett told me, I had dinner with Warren Buffett, swear to God, this is what he said. He was coming to my house for dinner, so of course I had to find Cherry Coke, right? And didn't have it in any of the stores, so I had to order on Amazon. So we had the Cherry Coke, he asked for Cherry Coke, served him Cherry Coke, and I said, I offered him water, and he didn't want any water. And he said to me, Bill, I haven't had water in 40 years. He doesn't drink water. Don't try that.
Well, I just want to thank you, Bill. We want to be respectful of your time, but this has been a great conversation. We really appreciate you coming over here and speaking to all of us, and thank you so much.
Sure.
It's great having you.
Thank you.
Are you good to take pictures for people who laugh?